Well, in this particular segment, we're going to go live and direct to the trading floor at the CME Group in Chicago, talking about here with our grain market action today. And let's go visit with Scott Gecas. He is right there just above the trading floor, pretty close. He's with Longleaf Trading. And thanks for joining us here, Scott, as we talk about our market action here today. A mixed affair in the grain markets. Is this just, some profit-taking heading into the weekend? What do you hear from the folks on the floor?
Yeah, I mean, the grain market in general, just soybean market, it's been all over the board. That 860 level, we've been talking about that for about a week and a half or so. It's been a very key level. So you've seen this morning when it broke below it, you see a big spike in volatility, a big spike in volume. Now we're a little bit above it, so we're going to keep an eye on that 860 level. But we had fresh selling coming in yesterday. I think, yes, today is a bit of a profit taking. But either way, there's huge supply concerns. We're going to be focusing on that USDA report going next week. Ending stocks are the main focus. So with the record of 572, that has been a record for quite some time. The ending stocks are expected to reach 1 billion. If that happens, without these exports showing up, you're going to see a collapse in this market, unless if the exports show up. So we need positive news out of China. Other than that, we're going to be staying to a little bit of a short side until we see some fresh positive news on the headlines.
Scott, that being said, how is the planting progress coming along in South America then on the new crop?
Well, the planting progress is actually increasing. You know, Brazil is still very competitive with U.S. soybeans, still trading at about at $8. I think the spread is around $8, a little bit more than $8 right now. Either way, though, they're going to run out of soybeans. That's just been the cycle for years, for the last few years. So they're going to have to go to U.S. to market the soybeans eventually. When that's going to show up, that's what we're waiting for as far as the export numbers come out to play.
Well, it's interesting that while the corn market is flat, soybeans have been firming up. Let's take a look on the corn market right now behind you there in Chicago. We have that December contract just down 1/4 cent at 3.67 1/4. Can't seem to really get any traction today. But if you look at the soybean trade, here we go with a look at November, 7.5 higher at 8.66 3/4. That's quite a difference. January, 7 1/4 higher at 8.80 1/4. And examining the wheat trade, we have a higher tone in the wheat. We have December Chicago wheat 4 higher at 5.22 per bushel. Kansas City wheat is also stronger today. We have December trading up 3 at 5.25 1/4 per bushel. Had a high, by the way, of 5.28 1/2. And if you look at the Minneapolis wheat trade, we have that December contract 2.5 higher at 5.92 1/4. And July is just up fractionally, up about 3/4 cent right now. In the cotton trade, we have that December contract now quoted at 76.33, and that is up about 33 points on the day. So, Scott, another question I had for you was related to these outside markets. There's been a lot of talk about the stocks, the dollar, the crude oil trade. Does it have much impact today on the grains?
I think so. With the high jobs, with the better than expected, well, jobs came in a little bit light, but overall they're still at a 49-year low. So with that being said, the U.S. economy is running all steam ahead, full steam ahead. Now you're starting to roar, the inflation is starting to come back to the market. Inflation scares, that's been a talk that we've been hearing all morning. We're going to see how that's actually going to play out in the next few weeks here.
Okay, thanks, Scott. We'll bring you back here in a little bit, and we'll pick your brain about our cattle and hog markets. We're talking with Scott Gecas, and we'll be back right after these messages. And we are back with our discussion going on with Scott Gecas of Longleaf Trading in Chicago right now. Scott, moments ago, USDA did issue their midday update as far as our wholesale beef and pork trade. Wanted to share that with everybody before we get into our futures market here. A little bit of a weaker tone in the beef business here today. The choice cuts were down about 19 cents. They were at 203.67 per hundredweight. Meanwhile, selects were down a penny at 191.97. So not a big change either way. The spread remains $11.70 this morning. Meanwhile, we have some new pork cutout values. We have some pork primal cuts here. Pretty much lower across the board. We have the carcass values down 66 cents at 79.25 per hundredweight. Loin market down 52 cents. The hams were down $1.80 at mid-morning, and bellies down 17 at 125.52. And this is all interesting because because the hog market on the futures is sharply higher today. That's a very interesting dichotomy there. So let's go to the futures board and take a look at live cattle and feeders and hogs. So on live cattle, we have the October unchanged, December now down 56 at 117.82. We've been all over the place in this market on higher and lower ground. February down 29. On the feeders, right now you have your October up 37, but everything else lower. November down 25 at 157.50. That's now about $1.20 off of our earlier high this morning, within about 20 cents of our low. Meanwhile, on the lean hogs, here we go. December now up $2.40 at 57.72. It's still about 30 cents away from its earlier high this morning, so it got up about as much as $2.70 there at one point. February, $1.70 higher at 66.42. So all the excitement seems to be, at least for the time being, in this livestock trade here, Scott. What's the trade talking about here?
Yeah, the livestock just in general across the board has been very strong. Strong U.S. numbers this morning, confirms that, there's a little bit stronger demand than on the average. With the cattle market in particular, though, we've been watching that 1885 level. When you've seen that break that, you've seen a big spike in volatility, big spike in volume. If we can close below that 1885, that's just signaling a trend reversal. So the trend has been up for quite some time due to just the strong economy. Now, with that close below that 1885, that's signaling fresh selling coming into play. So we're going to see how that's actually going to end up at the end of the day here. Going into with the hog market, it's been extremely resilient. It's still due to the hopes that the exports are actually going to show up. Huge supply concerns, all the African swine flu just across Europe and China, bird flu in China now. That's just expecting higher exports in 2019. So we're going to see how that's really going to shape up in the next few weeks here.
Okay, a lot to weigh on and digest in the markets here. So, Scott, thank you for helping us navigate the waters there. I appreciate that. And I wanted to mention also the cash cattle trade really has not developed yet. And we've been kind of scouring the wires to see if anything is shaken loose. Not yet, but we have seen Packer bids firming up to about 111 per hundredweight this morning. Last I heard just moments ago was asking prices were about 113 to 114 now, Christina. So they're coming a little closer together. I'll get something happening here before too long.